Okay, so let's unpack those movements further. We've got Faheema Adia, who's equity analyst at Momentum Investments. She joins us this afternoon. A very good afternoon to you, Faheema. Let's start with the overall market performance today. The JSE just shy of 1% to end off the day in the green. We did see some positivity coming through from some of the major indices. What would you say were the major contributors in today's trading day?
Afternoon, Rofhiwa. Yes, so the JSE was up by just about 1%, driven by the financials and the industrial sectors. So there has been quite a bit of volatility over the past few days due to some weaker earnings reports coming out of the US. But overall, the JSE is still at record highs, above 80,000 points. So it's been a pretty strong run on the JSE in the past few weeks. This is, of course, all being driven by more positive global sentiments. The US Fed has said it will likely slow interest rates. And then we've got the reopening of the Chinese economy, which has also helped boost global markets. If we look at commodities, gold has been above its 9-month high, trading north of about $1,900. So that's due to the general weakening of the dollar and also expectations of rates there slowing. Crude oil is also strengthening due to the reopening of the Chinese economy. So overall, there has been a lot of improvements in the markets over the past few weeks.
We can see the price of Brent crude edging ever so closer to $90 a barrel, Faheema. The Rand reacting to the announcement made by the South African Reserve Bank. It was anticipated that it would weaken after that announcement. Your thoughts on the 25 basis points and whether the Rand can weather the storm?
Yeah, so I think it took the market by surprise. So economists were looking for a 50 basis point hike. And of course, the Rand was a bit weaker in response to that. So I think it does send a view to the market that the bank is concerned about the constrained macro backdrop in South Africa. I mean, particularly more so now because of the high levels of load shedding. And while inflation is softer, it does remain out of the target band of 3 to 6%. So we have it, I think the last reading, it came in at about just over 7%. And you've already spoken about this, but economists are predicting that GDP growth is going to be extremely low this year. So we're looking at 0.3%, and it's looking to reach only 1% by 2025. So all really doesn't bode well on the markets and, in turn, the Rand. So I think there is a lot of strain on the economy at the moment.
There really is. Some company updates, Faheema. AVI, they released a trading update. What it told me is that people still love their biscuits. They still love their Five Roses teas, and they'll always be shopping at a Spitz or a Kurt Geiger. They obviously fall under this particular company, and they saw strong sales growth under that band of brands.
Yes, so I think in general, AVI did say they had a difficult period, heavily impacted by load shedding, of course. But fortunately, they were able to invest in some backup power, which I think did save them in a certain way. But it has cut into their profitability because that obviously comes at a massive cost to run those generators. So there's also been some pressure on margins due to rising input costs, and sales volumes were lower in some categories due to a constrained consumer. If we look at the group revenue, it did increase by 7%. Operating profit, however, not so great. The bottom line is at 1.7%. And if we look at the I&J fishing business, that actually took quite a big hit because of the lockdowns in China, impacting sales, and then we had the high diesel costs. So if we look at the earnings, that's expected to remain pretty flat, the growth in earnings for this year. Yeah, so it's a tough environment.
Yeah, that was the sentiment that was shared by Truworths as well. They did see some sales growth as well that came through their period, and they obviously have highlighted this issue of load shedding and other input costs being a problem, but overall they were okay with what they saw coming through in terms of sales in the reporting period.
Yes, I agree. It was a decent set of numbers, especially considering the challenges faced from high levels of load shedding, high inflation, and then we've also got a consumer that's under increased pressure. So they reported an increase in revenue of about 13% and said earnings are expected to increase between 8 to 11%. However, if we look at the bulk of their revenue, that's actually being generated by credit sales. And this is something that we're expecting to come under pressure as interest rates in the country continue to go up. They also cater to more of the mid to upper segment of the market. And we're finding that a lot of consumers are now down trading or cheaper discount brands such as, Pep, Mr. Price, which we believe will continue to take market share from Truworths. So all in all, we expect Truworths to face further headwinds this year.
Thank you very much for that update. That is Faheema Adia, who's equity analyst at Momentum Investments, joining us to wrap up today's market movements. And that's all your business news from